Hey friends, let me start with a reality check Beijing will never admit. China is not just slowing down, it's not cooling off, it's not experiencing temporary headwinds. No, China's economy is now showing what I call an L shaped collapse, a sharp drop followed by a dead, hopeless flatline. And the real question everyone keeps asking is how far back did China fall? To 2019 before the COVID pandemic? To 2012 before Xi Jinping took over? No. If you actually look at housing, jobs, incomes, deflation, bankrupt developers, collapsing confidence, and stress levels across the middle class, China is not going back 5 years. China is regressing 25 years, all the way back to 1999, the year before the middle class was even born. This is not a slowdown. This is economic time travel in reverse. And the scariest part, the group that defined China's rise, the urban middle class, is being erased exactly the way it was created, through housing, debt, and policy decisions far above their pay grade. And I saw this shift personally. When I lived in China in the mid 2010s, before the pandemic, I watched urban middle class families spend every yuan on mortgages, childcare, healthcare, everything. They were already stretched thin, and they were quietly terrified of losing their jobs and cash flow, even during the peak boom, because of all the middle class liabilities and trappings they've accumulated. That was the fragile state of Chinese middle class land. What is happening now? It makes even those days look like paradise. Let's break it down. First, let's rewind to the year 1999, the birth year of China's middle class. 1999 wasn't just another year. It was the beginning of China's urban middle class era, because two historic events happened. First, the 1998 housing reform abolished welfare housing and created private home ownership. So that created the wealth machine of the 2000s in real estate. And then we have the 2001 WTO accession, which plugged China into global supply chains and foreign capital. These two events created the foundation for everything: home ownership, rising wages, booming industries, tech growth, real estate wealth, international travel, the China dream. So 1999 was the year China went from basic survival to possibility, from factory workers to homeowners, from bicycles to automobiles. So when I say China is going back to 1999, I mean the entire foundation of middle class life, jobs, housing, confidence, consumption, all of it is being dismantled. Economists love arguing about the economic recovery shapes: V shaped, U shaped, but the reality on the ground feels like an absolute L. A collapse downward, just followed by nothing. Not recovery, not stagnation, but retreat. China is regressing to the pre-middle class era, where your job is not secure, your home is not appreciating, your wages are not rising, and your future is not promising. Sound familiar? It should, because their neighbor Japan already lived this movie. China is entering its own, Japanese lost decade, only much, much, much worse. If you want a preview of China's future, just look at Japan after the bubble popped in 1991. Japan's collapse included near zero GDP growth for a decade, about 70% crash in commercial land prices, and 50% crash in residential prices. Deflation year after year. Bad housing loans killing the banks. And wage stagnation lasting 30 plus years. Now compared to China, GDP slowing sharply, housing down at least 30% from peak, CPI hovering around zero, PPI negative for years, real estate developers defaulting, bank balance sheets swelling with toxic loans, and now they're faking with phantom loans, youth unemployment blowing through the roof, consumer confidence evaporating. So you see, China isn't approaching Japan's lost decade. It is already sliding deep into it. But unlike Japan, a rich country with rule of law that stagnated, China is stalling before even reaching the high income status. And that is the nightmare scenario. And, who were those people that climbed into the middle class ranks in China? Well, they were educated professionals, the tech workers, real estate investors, private business owners, employees in the financial sector, managers in booming industries. And their lifestyle had three pillars: job security, rising home values, and confidence in the future. They bought property and sent their kids for international overseas education, traveled, consumed luxury goods, and believed in upward mobility. And for those 20 years, the Chinese middle class was not just China's backbone, it was China's economy. But in the last several years, this middle class group suffered three crushing blows. First, job security vanished. The jobs that defined middle class life are gone. The tech layoffs at Alibaba, the Tencent, financial sector, widespread wage cuts, education sector wiped out, real estate developers imploding, youth unemployment adjusted out of existence because it was too embarrassing. And even after adjustment, official youth unemployment is still more than 14%. Actual unemployment is probably more than 30%. And the new grads in Shanghai, the jobless rate is about 50%. A degree is no longer a ticket to the middle class. It is now a ticket to food delivery apps. And then housing prices are falling into the abyss. Housing has been China's economic religion. 70% of Chinese household wealth is locked up in the property sector. So when housing dies, the middle class dies. And prices are down more than 30% in major cities. No liquidity, even when you slash prices because of the demographic collapse. And we have 800,000 forced auctions last year. Negative equity everywhere. People bought homes to get rich, and now they're stuck in these 30-year debt prisons for assets they can sell. And thirdly, we have this invisible poverty that is eating them alive. You know, those middle class families in big cities, they look rich on paper, but in reality, they're just one emergency away from disaster. Why? Because their income is swallowed by mortgages, which they signed up for before the housing crashed. And, healthcare, transportation, elder care, kids' activities. A family earning 500,000 RMB a year can save almost nothing. And here's the quiet killer Beijing fears the most. Deflation. CPI around zero. Wages stagnant. Consumption falling. The classic debt deflation. So prices fall leads to people delay buying and companies cut jobs. So wages fall and consumers panic and prices fall even more, which makes debt burdens heavier and the economy freezes. Yeah, China prints a lot of money. The M2 is exploding, but that money goes nowhere. It's stuck within the financial system. Why? Because people use the extra created money supply to save, to repay mortgages, to deleverage, to cover emergencies, not to invest or consume. And that is the liquidity trap, the exact phenomenon that floats Japan for 30 years. So why is this a regression to 1999, not just a normal slowdown? Because in 1999, China's middle class didn't yet exist. Housing wealth didn't exist. Real estate markets didn't exist. Disposable income was tiny. Jobs were stable but low paying. Economic optimism was really cautious. And globalization hasn't lifted Chinese wages yet. While today's China looks disturbingly similar. The so-called middle class is now insecure, over-leveraged, trapped by all kinds of liabilities, deflating, losing confidence. So the whole reversal, a social reset, a return to pre-middle class China. And when middle class wealth evaporates, you see birth rates collapse, consumption collapse, youth confidence collapse, lying flat generation, and social mobility collapse. Political stability gets shaky. Future looks thin. China's biggest risk now is not slow GDP growth, it's hopelessness for the entire young generation. And to reverse this collapse, China must stop the bleeding in the housing sector to restore the middle class confidence and fix the job market, which requires China to have new growth engines and break the liquidity trap. But without deep reform, China will do exactly what Japan did. enter a multi-decade stagnation, but starting from a much lower income level, with a middle class that quickly collapsed before it even stabilized. From 1999 to 2019, China lived through a once or twice in a human history boom, but that era is over. The story of today's China is not GDP numbers or trade wars or stock markets. It is the erosion of the one group that made everything possible, the urban middle class. And their decline is the clearest sign that China is not just slowing down. China is going backward.